Hi, I'm Mabel. And no, cows don't usually run retirement plans, but I did the reading. Here's something strange. If you work for yourself, there's a retirement account that lets you set aside almost 10 times what a regular IRA allows. And it can hold assets most people never touch. It's called a Solo 401k. Most self-employed folks have never heard of it, or they figure it's only for big companies. It isn't. And near the end, I'll show you the one thing this account does with real estate that a self-directed IRA simply can't. Let's get into it. A Solo 401k is a 401k built for a business with no full-time employees other than the owner and a spouse. That's the whole gate. Freelancer, contractor, real estate agent, consultant, one-person LLC, or a side business with real income, you may qualify. Your spouse can join the same plan, which doubles what your household can set aside. When it's self-directed, you're not stuck with a short menu of funds. You hold the assets, and West IRA, as the administrator, handles the account and the paperwork. You stay in the driver's seat. I'm a cow, and even I can see the appeal. Here's where it gets fun. A Solo 401k lets you wear two hats, employee and employer. As the employee, you can defer up to $24,500 in 2026. Then, as the employer, you can add more, up to a combined $72,000 if you're under 50. Turn 50 and a catch-up brings you to $80,000. Between 60 and 63, an enhanced catch-up pushes it to $83,250. Compare that to a regular IRA, capped at $7,500. Same person, same income, a very different ceiling. Numbers move every year, so check the current limits before you file. Self-directed means the range of assets opens up. Real estate, private notes, precious metals, private companies, and more can live inside the plan, as long as you follow the rules. There's a built-in Roth option, so part or all of it can grow tax-free for later. And here's a feature IRAs don't have at all. You can borrow from your own Solo 401k up to $50,000 or half the balance, whichever is less, and pay yourself back on a set schedule. Try that with an IRA. You can't. Just remember, this is about understanding your options, not a tip on what to pick. Okay, the thing I promised. When a self-directed IRA buys real estate with a loan, the borrowed portion can trigger a tax called UDFI, unrelated debt-financed income. It's a real cost, and it surprises people every single year. A Solo 401k gets a specific carve-out from that tax on leveraged real estate. Same property, same loan, different account, and the rules treat it differently. This is exactly the kind of detail nobody selling you a standard account has a reason to bring up. It's not advice on what to do. It's just how the rules are written, and now you know they're there. Fast questions. Can you roll an old IRA or 401k into a Solo 401k? Often, yes. Do you need an LLC? Not always. It depends on your setup. Is there a deadline? Timing matters, so ask before year-end. West IRA is an administrator. We don't give advice and we don't sell assets. We handle the account so you can focus on what you know best. If a real estate deal, a note, or metals is something you already understand, this is the structure people use to hold it inside a retirement plan. Check with your own financial advisor about your specific situation. Then give us a call. I'll be right here, chewing on the details.